Analysis of U.S. reciprocal tariffs and their potential impact on Canadian stock markets. Recent announcements of wide-ranging reciprocal tariffs by the United States have generated significant concerns regarding global trade and economic stability. While Canada and Mexico are currently exempt from the broad baseline tariffs due to the CUSMA/USMCA trade agreement, the situation presents both direct and indirect risks to the Canadian economy and its stock markets. Despite the exemption from the initial broad tariffs, tariffs on imports from Canada are still set to increase. This is primarily attributed to auto tariffs announced the previous week, which will push the average U.S. tariff rate on imports from Canada from approximately 2.5% to 3.5%. This increase, though smaller compared to the substantial hikes faced by other nations, is still expected to impact certain Canadian industries, particularly the automotive sector. Goods not compliant with CUSMA rules of origin from Canada and Mexico now face a 25% tariff, potentially driving Canadian industries to invest in compliance. U.S. stock market reaction and global concerns. The announcement of these tariffs triggered a significant negative reaction in the U.S. stock market. On April 3rd, the Dow Jones Industrial Average fell by over 1,600 points, around 4%, and the Nasdaq Composite lost nearly 6%. This sell-off continued, and by Friday, the Nasdaq Composite had officially entered bear market territory, marking a decline of over 20% from its recent high for the first time since 2029. The Dow Jones also entered correction territory, and the S&P 500 was nearing bear market status. Friday witnessed the highest volume trading session in the history of the U.S. stock market. The primary concern driving this market downturn is the fear of a potential global trade war, which could lead to a global economic slowdown and a resurgence of inflation. Several countries, including China, have already announced retaliatory tariffs and plans for negotiations, exacerbating these concerns and creating uncertainty around global trade policy. The average tariff rate the U.S. charges on imported goods is estimated to rise to over 20%, the highest in a century. Despite the CUSMA exemption, Canada's deep economic integration with the U.S. means it is not immune to the broader consequences of these tariffs. If the significant tariffs on other major U.S. trading partners lead to a notable decrease in U.S. economic growth, this could shrink the overall U.S. import market. A diminished U.S. demand would negatively affect all trade partners, including Canada, impacting export volumes, particularly in sectors like automotive and agriculture. The supply chain disruptions experienced since the pandemic highlight the interconnectedness of the global economy. Disruptions in other regions due to tariffs could still spill over to Canadian production and price growth. The ongoing trade uncertainty created by these announcements can slow down both consumer and business spending in Canada. While Canadian consumer spending has shown resilience, business investment in Canada is expected to remain weak due to anticipated tariff impacts and trade unpredictability. It's worth noting a contrarian perspective suggesting that extreme pessimism among stock investors can sometimes precede market rallies. The last instance of similar pessimism in October 2023 was followed by a significant rise in the S&P 500. Contrarians believe that markets often overreact, and buying during periods of widespread selling can be beneficial. However, the applicability of this historical pattern to the current situation remains uncertain. The CUSMA agreement reinforces trade relations between the U.S., Canada, and Mexico by providing tariff exemptions for compliant goods. This offers a relative advantage to Canada and Mexico compared to countries facing higher tariffs and could potentially lead to increased preference for their products in the U.S. market. The need for compliance with CUSMA rules of origin could also drive greater integration of North American supply chains. However, the potential for future changes to trade agreements or the imposition of new non-tariff barriers continues to create an environment of uncertainty. While Canada has avoided the most severe immediate impacts of the U.S. reciprocal tariffs due to CUSMA, the potential for reduced U.S. economic growth, global trade disruptions, and ongoing uncertainty poses risks to the Canadian economy and stock markets. The situation remains dynamic, with the possibility of further tariff adjustments or retaliatory measures. Therefore, Canadian businesses and investors must remain vigilant and adaptable to these evolving trade dynamics.
Thanks for watching. That concludes the update for today. What impact do you believe U.S. tariffs are having on the Canadian economy? Share your thoughts in the comments. Remember to hit the notification bell, like, and subscribe for more in-depth market research. See you next time.